G'day and welcome to the Motley Fool series, What I've Been Reading, where we find out what our analyst team has been indulging themselves in order to make themselves better investors. And then we share it with you because we figure if you're watching this channel, you're probably interested in investing as well. Our team are very smart, well-read people. And so why not share some of what they've learned with our YouTube audience? And to do that today, I'm joined by Ed Vesely. Ed, g'day.
G'day, Scott. How are you?
Mate, very well. Thank you. And thank you for joining us. I'm going to say, mate, I have normally read or heard about or I'm across the things that most of our team talk about. This one came out of the blue. It is the Nomad Investment Partners letters. Now, Nomad Investment Partners, I've not even heard of them, mate, which makes me feel a little bit like I should be brushing up on my general knowledge. But tell us about Nomad Investment Partners and tell us about the letters.
Yeah, absolutely. Yeah, look, I'm the letters themselves are for the period 2001 through to 2014. The letters are the Nomad Investment Partnership letters. Investors who were invested in the partnership for that 13-year period were sent these letters just for the investors to have a greater understanding of how their money is invested. It's also a great way for the managers themselves to communicate their thoughts on how markets were going and how the performance of the fund was going at the time. And speaking of performance, this is the whole reason why I suppose I'm looking at this. I'm halfway through the letters, by the way. I haven't read all of them. They go to 218 pages, I think.
Wow,
And
okay.
anybody can find the link online just by typing in Nomad Investment Partnership letters or Nick Sleep. Nick Sleep is the co-founder and the portfolio manager. Now, coming back to performance, the reason why I'm so interested in this is because for that 14-year period, the partnership had earned a compound annual growth rate of 18.4% every year. So that basically 3x's your money. And I'll say that again. It's 3 times the return of the world index, I meant to say.
Right,
So 3
right, right,
times the
right.
level of the market.
Yeah.
No, you didn't 3x your money. It actually had turned a $10,000 investment into $90,000 over that period. So it's
It's a pretty
really,
good
really good.
result.
It's an excellent,
Yeah.
and it's just very disappointing. I think that it had to be wound up in 2014, but I guess they had their reasons, unfortunately. But basically, Nick Sleep, as I say, he's the co-founder with Case Zakaria. He is the second gentleman there, and they both ran a pretty good tight ship there for that little period between, as I say, 2001 and 2014, and we can learn a lot from them.
Very good. I guess my question then to you is what have you learned from their returns and what they've written?
Well, in terms of what I've learned, it actually reinforces a belief that I have about investing already. A lot of the tenets that we espouse here at the Motley Fool are things that they've come up with themselves. I mean, they've actually demonstrated that long-term investing really does work. So long-term thinking, not getting caught up in the hurly-burly of what markets might do from one week to the next or one month to the next. It's so easy to do. And even, I've been investing for so long, but I can tell you when you see a big downdraft in markets, you tend to think, okay, well, something's going on. Maybe it's time to worry. I've trained myself not to react to worry, but long-term investing and thinking is really something that they've really emphasized in their letters. Another thing that we like, Scott, is I'll go through 3 or 4 of the main points that I've discovered so far, but the ownership mentality. So again, we talk about investing alongside co-founders, for example, but also taking ownership of your own shares or your investments. In this case, they were units in a fund. But if you can really emphasize, if you're buying shares and you're owning that company, if you can just forget about the market for just 5 minutes, and just think that you're actually owning shares in a company, you can pretend it's privately held. You really are moving away from the mindset of a ticker on a screen to real assets and staff and systems and distribution arrangements that they have for their products and so on. So thinking as an owner, I think really does help with long-term returns because it comes back to that long-term investing timeframe as well. So I guess when you do that, you can focus on the good things about a business. Hopefully it's got some competitive advantages, some quality management, maybe an excellent product or 2 or 3 that they can sell into the markets, or services that they can sell into the market. So there's a lot of good ways to look at these letters and just learn or relearn what we should be knowing anyway about what I think is not necessarily the only way to invest, but it's a very good way to invest. It doesn't have to be. Some people can actually do very well by selling at peak times and over 2 or 3 years and so on. But I suppose we take the view that we like to invest and go through those cycles as long as the underlying quality of the business remains. And again, that was my third point: quality businesses. You'd be investing in companies that can demonstrate some growth, but can do so profitably with high returns on capital, high margins. Companies that have durable competitive advantages, hopefully some simple operations that are easy to understand. If it's too complicated, it could be too complicated for the investor to understand as well, which just heightens the risk of making mistakes in judging a company in the first place. So there are three of the quality. There are the three of the points: quality businesses, an ownership mentality, and long-term investment thinking. But as I say, it's something that we have here at the Motley Fool. And even before I started at the Motley Fool, Scott, it was something that I'd been learning, really focusing on the long term, trying to, again, find those quality businesses. And the best way to do that is just by reading a lot, going into company annual reports, and also relearning or re-emphasizing these mindset pieces here from the likes of this partnership. It really is educational reading, and I wouldn't say everyone has to go out there and read it today. 118 pages, Scott, but it's an excellent read. And if you've got a few months to just go through it, maybe one letter at a time, I think it's time well spent.
Very nice. That's the Nomad Investment Partnership letters. Check those out. Ed, thanks for sharing them with me. I said I hadn't heard of them before. I'm going to now go and check them out. So I'm learning as well as our viewers are. Mate, thanks for sharing that with us. Thank you for watching. Spend a bit of time with us. If you're liking what we're doing, do me a favor. I know I ask this all the time. If you haven't yet subscribed to the channel, please do that. Make sure you hit the notification bell so you get the content when it's released. We release really great content every single week, so you want to be part of that. And of course, if you hit the video, hit the like button for us, other people will find this video as well. If you've enjoyed it, I'm sure you have, because Ed's given us some great nuggets there. Other people will be able to find it as well. All right, that's it from us. Until we speak again, thanks for watching, and Fool on.